Technical foul. That's our topic for today's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. Happy Hump Day. Hope you're having a great Wednesday so far. This morning so far, stocks are down just a little bit. Mortgage bonds are down a little bit more. We'll talk more about that in just a second. But first, let's talk about Mortgage Bankers Association. It's Wednesday. Every week the MBA releases their weekly application data. And data showed that last week, purchase applications fell about 4% and are down 17% year over year. The average interest rate fell from 5.84% to 5.74%, costing about a point. So we're seeing that little bit of that decrease in interest rates. And we've seen some a little bit of pickup in activity over this past weekend and into this week, even though it was a holiday week. And so we'll see how the drop in the interest rates, see how that starts to affect some activity. Refinances were down 8% week over week and down 78% year over year. And they make up less than 30% of all transactions. Now later today, the Fed is going to release at 2 p.m. Eastern their minutes from their June 15th meeting. The reason why this is important, it's always kind of a market mover because it really gives you some insight into what the Fed is thinking. Specifically, we're looking about what their thoughts are on inflation, on recession, and possibly rate hikes for future meetings. Also, very, very specifically, we're looking to see if they talked about outright selling of mortgage-backed securities. If they did, that could have a negative effect on the bond market by adding some extra supply mortgage-backed securities into the market and kind of putting a damper on the price. So we'll see what is in those the minutes for that meeting, and we'll let you know how that's going to affect the bond market. And specifically talking about the bond market, mortgage bonds are down 34 basis points at the time of recording. Been a little bit of a roller coaster so far today. The 10-year yield is up about 6 basis points. And really, we're calling a technical foul on this because the bonds, closed yesterday above the 50-day moving average, and we're trying to stay above that 50-day moving average, which would have been great, but they just couldn't do it, and so they came back down below that very specific technical level of the 50-day moving average. And then stronger than expected data from the ISM, which is manufacturing data, came out, and that kind of threw a little bit of fuel on the sell-off, and so we saw bonds go from about 3 basis points down to about 40 basis points down, and they receded just a little bit. What that means for mortgage rates today is that mortgage rates open flat, but we've already had a reprice for the worst. So mortgage rates have already repriced for the worst so far today. We'll see what the rest of the day holds, specifically for the Fed minutes, those meeting minutes. We'll see how that affects the market. Now, tomorrow we have ADP jobs report. It's an important jobs report. And then we have non-farm payrolls on Friday. Both of those reports are going to be important to see how the jobs market is holding up. And that's really going to be a potential market mover. As that news comes, we'll bring it to you, but that's all that we have for today. Remember, like, comment, and subscribe. If you have any questions, leave a comment. We'd love to hear from you. Hope you have a great day, and we will see you tomorrow.